All right, everyone, it's time to be very careful in this environment. Crypto starts to sell off once again on the weekend. Bitcoin, Ethereum, and other cryptocurrencies. We're going to be getting into some technical analysis here on these charts. I'm going to give you some thoughts, and I'm going to tell you how I plan on outperforming the price of Bitcoin this year. Got a lot to talk about. Let's get into today's episode. Welcome back, everybody. We are looking at a daily chart here of Bitcoin. I applied an anchored VWAP to this specific chart. More specifically, I am anchoring it to the very first trading day of 2022. This measures the average volume weighted average price. So it really tells me, hey, is the average buyer from the beginning of 22, are they, in the green or are they in the red? And as of right now, you can see the average buyer is currently underwater in 2022, which it's never a good thing when the average buyer is underwater. Typically, more fear increases and more selling increases. As you can see, we had a big hit to the downside. We traded sideways, and then we just got that flush into the weekend. Moreover, too, you can look back to the left of the chart. It also acted as a level of resistance. So the anchored VWAP in 2022 is going to be a key level to watch. As it stands right now, the level is at 40,544. So 40,500, just for rounding purposes, is a number that we want to remember. If we zoom out and we take a look at a weekly time frame, I applied another anchored VWAP. Now, if you remember this symmetrical pattern right here, this pennant pattern that we broke out of, and we really didn't look back much longer after a quick back test, and we ran just pretty much completely vertical. I'm calling this out because if we anchor it to that breakout point, you can see it's been held as support, and it's doing so right now as well. Now, what's important to note is, what do you think that the average buyer will feel if the average buyer from this monster breakout is then trading underwater? And to be honest, we're not too far off from that point. So if we start cracking down and having weeks that close underneath that could produce more potential selling where we can see a sharper move to the downside. So that is something that we need to be very mindful for. Now, how do we outperform the price of Bitcoin? I use what's called the Saylor to Schiff ratio. It's an indicator that I put together, and I talk about it on this specific video. That's the thumbnail. I'm going to have the link in the description below. If you want to watch that, I tell you how to build the indicator. It's all free, and how to use the indicator as well. It's just a tool I implemented. I created a strategy around the tool. Doesn't mean you have to use that same exact strategy, but if you're unfamiliar with this, I would highly recommend watching that video in its entirety and getting familiar with that specific tool, because it did outperform the price of Bitcoin the previous year, and it has warned of every single big Bitcoin and crypto crash. Now, trending in Twitter sphere right now is buy the dip. Should we just jump in and buy the dip? Well, there's smart people saying that Bitcoin is a venereal disease. Then you have Nassim Taleb saying that Bitcoin, turns out, it's not a hedge against inflation. It's not a hedge against oil squeezes, not a hedge against stocks. And of course, Bitcoin is not a hedge against geopolitical events. Actually, the opposite, a perfect sucker game during low interest rates. That's kind of interesting, because we actually haven't been in an environment with raising rates. And to see now Bitcoin, how it's responding in this environment, seems very similar to other high growth innovation type names, which are starting to sell off. But let's take a look at the Bitcoin indicator. So the Bitcoin indicator, if you're unfamiliar with this, or the Saylor to Schiff tool, it produces buy and sell signals based off of a 4-week rate of change between the relative strength line of Bitcoin and gold. Get it? Where I come up with Saylor to Schiff, right? Saylor, super big into Bitcoin. Schiff, super against Bitcoin, but very big into gold. When the line crosses above through the zero line, that is technically the buy signal. Now, there's a strategy behind it, because there are false signals, and I have a strategy that kind of walks us through that, but I explained that in the video. So the buy signal triggers, and you try to catch those long moves with the price of Bitcoin. Sell signal triggered here, big sell-off, buy signal, boom, to the upside, another sell signal, small sell-off, buy signal, sell-off right here. That was in early November of the previous year. And man, it's been a wicked ride to the downside. Now, more recently, if you haven't been following me, a buy signal was just recently triggered. Right here, this green line, and it was actually a real signal. These ones right here were actually false signals. You might be wondering, what about those? Those were false signals, and the reason why I'm bringing it up is because we might be in for another false signal. So first and foremost, this was the buy signal, and if it was this week, I wait for the next week, and when the next week comes up, we need to trade above the previous trading week. So I got into the price of Bitcoin on this buy signal. However, the very next week whipsawed us to the downside, producing a sell signal. So that means that I bought in and then my sell signal was triggered pretty much instantly for a 0% gain, really a 0% loss because it was rather flat. Now, why I'm calling this out is we are currently, as of right now, we still have later into Sunday for this to close either above on a buy signal or not. So right now it's there, and it looks like it could potentially hold into next week, which means it produces a quote-unquote buy signal. But how is the buy signal actually triggered? Well, check this out. When this candle closes, there's going to be a new candle that forms. Okay, so that doesn't mean you just buy in right there, at least according to my strategy. What it does mean is if the buy signal holds, you need to have the price of Bitcoin get back above this previous high of the previous trading week. Where is that at? 45,000. Remember what we said about the number earlier? 45,000 is actually the anchor VWAP, the average weighted price of the year. 40,500. So that is clearly an area of resistance that we're going to be needing to pay attention to. Now, if the Saylor to Schiff ratio turns back down and we do not produce a hit above the 45,000, that means that this was a false signal. So there are precautions with this indicator that you need to consider. But overall, what this indicator, what this tool does, it allows us to try to catch the big moves and the long moves to the upside, but protect us from the downside. And it did outperform the price of Bitcoin the previous year. And you can do your research too if you want to look at previous years too. It's predicted every single big market sell-off. So you got to be careful. Let's hop into the weekly time frame for Bitcoin. Overall, it's been just trading sideways, so it can potentially come down even further, right? It's just within a channel right now, and that can bring us all the way down to 30,000. Not predicting that that's going to be the case, but understand where we are, right? The PMO, okay, momentum oscillator, it's pointing down. RSI, below 50. We're below all the key moving averages. Why is buy the dip trending on Twitter? This is a pretty dangerous area to be, especially look at other high risk type assets. Now, if we take a look at the daily time frame, you can see here we had that bear flag that was forming, tricked us all right up. Maybe that was just all a bull trap right there as we're starting to sell off. Very early to tell at this particular point in time, but the PMO is starting to curl back over, well below zero. RSI is below 50. This, to me, looks very weak. As you can see, we have lower highs, we have lower lows. So we don't have a base form. All we have is a lot of volatility and a lot of uncertainty, unfortunately. So if you're looking to just try to catch a specific dip or look for all this certainty, like, you need to step back because you can get burned in this environment. This is not a time to be a hero. If we take a look at the weekly time frame for the price of Ethereum, very similar situation. We're below all those key moving averages. Price momentum oscillator is pointing down. RSI is below 50, below those key moving averages, as I stated. Not looking too healthy overall. We have a high, another high. We have all this area of support right here, right around 1750. So yeah, I mean, we can head up. Remember, right now we are just within this sideways chop bucket as it stands right now. If we take a look at the daily time frame, Ethereum, look at this monster move to the downside. And I know it's overextended to an extent on some other time frames, so it's most likely going to produce some sort of a bounce at some point here. But just take note, I did notice that this volume profile right here could be a very positive area for support if you're trying to trade it short term, or add, if you're a very long-term investor, which we'll discuss here, it could be a potential good buy point right at around 1,800 to 2,000, but just be mindful of the market conditions. A lot of people aren't paying attention to the market conditions and what's actually taking place. They're more interested on like, where's the perfect place to buy this at, to see a potential bounce, or is it going to recover all the way up to all-time highs? And unfortunately, in uncertain environments, it's kind of a, I guess it's just a bad game to play, I guess would be the easiest way to say it. Now, I want to draw out a very bearish scenario here and run it by everybody because it's not like it can't happen. And if you think that this can't happen to Bitcoin or Ethereum, I mean, you're living in just narrative land at this particular point in time, and I'll prove it to you. So Bitcoin, I wanted to just point out a couple of things here. So first and foremost, we have areas of support right here, right? And that's right around this volume shelf profile. Bitcoin's been heading down. We got a nice big bounce, and now we're selling off. If it comes down to this area right around 30,000, that's minus 56%. Some people think like that, no, it's not going to happen. And minus 56%, it's from the peak. So from the peak to here would be minus 56%. Okay, and then people might say that's the bounce, the buy right here, that's as low as it's going. They might be right? Because we're still within that channel. However, if we start breaking that, understand that there's not much volume between that area because it was such a strong move to the upside. So there's an air pocket, really a big one, down to 20,000. And that would bring us to a minus 70% from peak to here. And some people were like, that's impossible. That is not going to happen. Well, hold on. I'll show you a couple of things here momentarily. Now, even further down to the downside, we have this big volume profile. So if it comes down in this range around 12,500, that'd be minus 82%. A lot of people might look at that and be like, never going to happen. Hold on. I will show you something important because keep in mind, Bitcoin, you might not think so, but it's been a product of low interest rates. And we don't know what it's going to be like in a different environment. It could be very good, right? This could be just all temporary noise taking place. But, you know, be careful. Ethereum, same situation here. If we look at a couple volume nodes to the left-hand side, you can see this shelf profile right here, minus 64%. That would bring us to around 1750, which it's been at that level and holding a support and resistance previously. So that could be a potential dip buy right here too as well, which would be a minus 74% at 1250. And then if we really start getting hit, look at this volume shelf profile over here, which is around 750. And most people would look at that and be like, never going to happen. It's not going to happen. Just understand we're below all these key moving averages. Things are starting to flatten out. We have lower highs, lower lows. It's starting to trend downward, my friend. That is the reality right now. Okay, so now this is where it gets interesting. People might look at that and be like, never going to happen. Well, just keep in mind this. The ARK Innovation Fund is down 60%, right? From peak to trough. That's more than the price of Bitcoin. So even this innovation fund, if it can fall 60%, you know, what makes you think that Bitcoin can't? You know, what makes you think that it can't go retest 30 or get into the 20s, let alone even Ethereum? But you might be thinking, well, that's just a bunch of, you know, stuff that ran up because of monetary policy. Well, yeah, well, Bitcoin too. All right. Peloton down 82% from the peak to high. And everyone might be looking at this and be like, well, come on, that's Peloton. It's a crappy company. It has nothing to do with Bitcoin. You don't understand cryptocurrency. Well, that's not the point here. I'm just showing you what can potentially happen to these high flying names. And you might, that's fine. Peloton, whatever. Shopify, same thing, minus 62%, peak to down here. We don't even know if this is going to end yet because of just how nothing is based out. It's going to produce some wild bounces. That's probably for sure. But just understand things are breaking down in this environment, and it's a very, very unsafe environment to be. So why am I showing you all this? Well, first and foremost, also one more, PayPal is down 67%. So we're talking some mega cap, big tech companies that are getting hit hard. And if you think that, you know, it can't happen to a cryptocurrency, which people can't even really wrap their head around completely at this point, they can wrap their head around these specific companies like PayPal and Shopify, and they're getting just completely destroyed. And you might be thinking, well, you know, show me a time where there's actually a good company or something very positive that can fall that far. Well, look at McDonald's. McDonald's was reporting earnings. It was a very good company, but remember in the 70s, probably not, but if you look back on a chart, that went down 72%. So if you think Bitcoin can't fall 72% or 75%, McDonald's did, and even during this time, they were reporting very good earnings. And then during the tech boom and bust, it went minus 76%. And I know McDonald's is a lot different than cryptocurrency, but still, you got to understand, even good companies, let alone new innovations, right? Cryptocurrencies, they can fall, and they can fall harder and faster and further than what you may think. You know, if it doesn't scare you out, it'll probably wear you out. Next one is Amazon. Amazon went down 95% after the tech bust. And Amazon's a good company. Even here in the 2008 financial crisis, it fell 66%, all of which is more than where Ethereum peaked to where it's at right now and where Bitcoin is from its peak to right now. So if you think that this can't happen, you need to wake up. You really do, because you got to understand, we don't know what's to come here with what the Federal Reserve is going to do. It seems like they're going to be raising interest rates into a slowing economy, and we haven't seen this act as a store of value. It just has not happened. Like Nassim Taleb says, it hasn't acted like a store of value. It hasn't been, you know, a hedge against geopolitical events and so on. That is the reality of what's taking place right now. So I urge you with this warning, we might not, you know, we might go down further, but understand, even if it's a new innovation and things are good and it goes down, it doesn't mean that it's down and out forever, such as like a company like Amazon, right? Amazon went down 95%, and anybody that was convinced that this was a strong company down in this point, let's just say if you put in a lot of money and you held in over the years, or even right here, you're doing very, very good and you could have made a lot of money. And same thing goes with McDonald's. The reason why I'm telling you that, the more that this market sells off, if you are convinced that cryptocurrency is going to be the innovation of the future, which decentralized finance seems like we're headed that direction. Very similar to what we saw in the tech boom, and then all of a sudden it busts like crazy, but then all this innovation came out from that massive bubble pop. That could be the very same situation with various cryptocurrencies and crypto companies. That's all I got for you, everybody, on today's episode. Hope I gave you some insight. Go watch that video where I go over this specific indicator. It will help you get in and out of positions as of right now. It's not the holy grail by any means, but it has been a pretty strong tool to use, and it could potentially help you with positioning as well. Have a wonderful week.